Hi, Matt McAleer, Director of Equity Strategies. May 7th, just after the close. A lot of headline noise this week. We saw earlier in the week a administration comment in terms of waiving IP rights, patent rights on biotech companies that have worked on the COVID vaccine. In our estimation, an awful idea by the administration. David Kotok has a video discussing that. So I'll keep my video fairly tight. Next to that headline, we had a headline this morning, Friday morning. Weak jobs number in non-farm payroll. We don't get too excited one way or another on that number. That monthly adjustment at times can be large. We do see other areas of the analytics showing a very strong rebound in this economy, which leads me into, again, what was working this week. Energy, basic materials, industrials. It's been a theme, started slowly in the fall, has picked up momentum, and now any slight pullback in those areas are being met by demand. You saw energy get thumped 2 weeks ago, but boy was there demand sitting down underneath there in the service names and in the big integrated names. In terms of basic materials, equities are solid as a rock. Commodities, you've probably seen, are back to levels we haven't seen in a decade. So very good strength in those cyclical industries and sectors that are normally, a obvious flag that an economy is gaining momentum. In terms of bonds, little weakness in yields. Yields came back in off that number. Patty Healy is going to add a video covering what she saw this week, talking a little bit about credit, talking a little bit about interest rate levels. The moose is in the air. You know things are getting better because Mousseau is back on the road warrior. So he's flying back into town tonight. We'll get John back on video next week, get some further thoughts and ideas. Where we sit in our portfolios in action this week, quiet. We like what we own, it's working. The one area we did make a move in our US ETF strategy, we did buy a little more biotech into that weakness on Thursday. We try to take advantage of what we consider headline news at times. We got a sell-off in biotech. XBI traded down into that 123, 124 area. We did add to our position there. It will be interesting if this pushback on the administration's waiver stance gets them changing their mind in terms of unforeseen circumstances, and David will get into it. But can you imagine a pandemic 5 or 10 years from now? What the response would be is if, when they look back and see the companies like Pfizer and Moderna that responded heroically today had those patents and IP taken away from them, intellectual property taken away from them. Really an unheard of scenario, and I would imagine there'll be plenty of pushback. Have a great weekend. We'll see what happens next week. In terms of news next week, we have a couple of interesting reports, and I'm sure we'll cover them Friday.
Hi, I'm David Kotok. John Mousseau is on an airplane coming back to Sarasota, Florida, so I get a chance to join Matt McAleer on a Friday afternoon. Terrific. It's first opportunity in a while. I wish everybody a happy Mother's Day for the weekend. Let me get to 2 quick points. The employment report was a negative surprise. Alarmed people. It was if you think about it, you have to look at the revisions too. So the revisions went from 1 million down to 600,000. The new one was 200,000 instead of 1 million. The 2-month total, instead of 2 million, were under 1 million new non-farm payroll jobs. That is a surprise to a lot of people. It's not a surprise to us. We've had a shock. COVID is a shock. It's a demographic shock. You have people who died. You have people who have long-term disability or short-term disability. They are the long haulers from COVID. There are 3 to 5 million of them, and more are being revealed every day. COVID is a very serious disease, and it can have long progressive portions. That's the first point today. The second point has to do with the pharma, biotech, medical, wonderful companies of the United States, which have rolled out, like Moderna and Pfizer, the vaccines which are saving lives all over the world. The question was whether or not they should give up the intellectual property patent protection. So there was a lot of headlines about this. Of course, we all want everyone to get vaccinated, the world. We have to do this. But to give up the IP structure makes no sense. And there's a bunch of reasons why. We published about this morning. Some people disagree, but we want to make the point clearly. Moderna gave it up in October. It didn't create any more Moderna vaccine than has been created. It takes a huge complex of materials and skills in assembly and production and distribution to make this vaccine. It is a marvel of the new world. So since October, Moderna's already done this. You didn't get any more vaccine of the Moderna type than you could have, and they are doing everything they can to ramp up distribution worldwide. Pfizer is in partners with a German firm, and the two firms are doing the same thing. Germany is opposed to the intellectual property patent suspension. So nothing gained except a feel-good headline. More importantly, if it were to succeed, what would happen if in another country, without supervision and without all of the issues that go into assembling the vaccine, making sure it's valid and good, what would happen? Would we get a counterfeit vaccine? Would it get into people in a third world country? Maybe. Would there be the same kind of rigorous supervision as we have now? We don't know. And would the competitive issues drive up the prices of the very materials which are in shortage now, trying to make as much vaccine and distribute it worldwide? So our position is in opposition to this. We think Americans, the world, the concern about the disease is best facilitated by leaving things the way they are. These great American production, biotech, and pharma companies are saving many, many lives and treating people worldwide. I'll let Matt McAleer talk about the stock market reaction to the patent vaccine COVID issue, but there's a policy issue, and so it gives me an opportunity to explain it to everyone. Again, happy Mother's Day on the weekend. Please be safe and careful. Travel with caution. Thank you.
Hi, I'm Patty Healy, Senior Vice President of Research at Cumberland Advisors. Today is May 7th, and I'm filling in for John Mousseau, who's on yet another business trip to visit with clients. So we are having a return to normalcy. The bond markets were a bit crazy this week between Treasury Janet Yellen saying that the Fed could possibly increase interest rates, just saying that that's an option that they have. People reacted to that. Then the Fed was talking that it maintains being data dependent. On Thursday, initial jobless claims came out and they were much better than expected. They were down only 498,000 compared with expectations of 538,000. So people are happy about that. President Joe Biden on Thursday evening suggested removing patent protection from vaccinations for the virus. That caused a lot of stir. You'll hear David talk about that, David Kotok. And then this morning, the market was hit with a curveball. The payroll numbers, which had been, the expectations had been increasing over the week to about 1 million new jobs actually came in at only 266,000, and the unemployment rate went up to 6.1% compared to expectations of 5.8%. A little bit of a silver lining is that the productivity rate bumped up a little bit to 61.7%, and that's what we're looking for. We're looking to see more people entering into the workforce, so that's a good number. Interestingly, the bond market didn't change that much over the week, although there were ups and downs throughout the week. The 10-year bond ended at a 158, down in yield 5 basis points from where it was last Friday. And the 30-year bond ended up at a 227, just 3 basis points lower than where it was last Friday at a 230. So 158 and a 227. As we've talked before, we expect there to be a return to normalcy. Obviously, this week has shown that there's going to be a few hiccups along the way. It's maybe not going to be a complete straight up line. And with that, we see interest rates creeping a little up over time, back to where they were at pre-pandemic levels. And for the muni market this week, inflows were down a bit, only at this is inflows into mutual funds. We're down quite a bit, and it's probably a bit of a pause. People are maybe going to be paying their taxes in a few months, so that number inflows may come up again. Though the muni yield for the 10-year ended the week at a 0.99, or almost 1%, pretty much where it was last Friday, and the 30-year was down a bit at ending at 1.55%. So the muni treasury ratios are still kind of low, and I think we've mentioned this before, that in some muni accounts we may entertain buying some taxable muni bonds, which even on an after taxable equivalent yield are yielding fairly good. So there could be some performance. And actually taxable muni bonds have the spreads narrowed a little bit in that space. So all in all, it was a very interesting week. Always something interesting to look at in bond land, as we call it. And as always, as Matt usually says, we're here for any comments or questions that you may have. And thank you, and have a great weekend.